It's been an absolutely monumental few days in the world of digital assets, especially for altcoins. We're right in the peak of what Trump has coined Crypto Week in the House of Representatives. And let me tell you, crypto participants are going wild, front running what they believe to be an inevitable passing of the three main crypto related bills. Now, if you've been following along, you know there were some initial hiccups at the beginning of the week, but things have been moving at a pretty good pace. We're talking about some potentially game-changing legislation that could shape the future of crypto in the United States. So far, it hasn't been smooth sailing. There was some debate, particularly among Republicans, about linking the CBDC ban directly to other crypto legislation. And ultimately, a deal was struck to attach the CBDC ban to a defense authorization bill, which helped clear the path for these crypto bills to advance. Now, President Trump has been a vocal supporter urging Republicans to get these bills passed and reiterating his goal of making the US the crypto capital of the world. So you might be wondering, what is next? Is all the voting done? The answer is no, not yet. The House successfully voted to advance these bills, which means they can now go to the House floor for a full vote. We expect these final votes to happen this week, potentially even today, so keep your eyes peeled for those results. But I know that you just want to know, Annie, what do? I missed the pump, or I got the pump and now I'm scared to give it all back. Don't worry, I'm going to get into price action right now. All I'm waiting on is for you to smash the like button and hit subscribe if you're not already subscribed. So you go and do that, and I'm going to head over to have a look at Bitcoin first. Now, if you've caught my prior videos this week, you will know that I was talking about a trade setup called the 33 trade. It's one of the trade setups that we trade over at TTC. It's part of our courses, and this is essentially it without explaining it in detail. The moral of the story is what I mentioned to you at the start of the week, I think it was on my Sunday video, was that completion of that trade setup should lead back to a 1 hour time frame 200 EMA retest. And you can see that is what happened here on Tuesday of this week. So that means that entire trade setup is done, and you basically reset the market. So you start to look for new counts, new levels, new potential direction that is either a change in trend or continuation of the existing trend. So since that happened so far this week, with Bitcoin in particular, it hasn't been the kind of price action that I personally look to open new trades, even though I do have this area of interest marked that I'm going to talk about, and I do have some targets to the downside. I personally don't want to short when we're in a bit of a parabolic run. If I see that price is looking like it may retrace, I rather just let that retracement play out, hit my target, and then look for a long position from there. So let me talk about this area of interest that you're seeing on my chart. This was an area that I highlighted to the Discord community right here. Maybe we get a how retest. So that's what this is here. So the how is the high of the week. It's the highest point the price went in the week prior to the current week. And it's this line sitting here at about 119,750-ish kind of area. So at this point in time, price has retraced back into that zone and it's pulled away. So it hasn't yet closed above, but it hasn't pulled away with any kind of momentum. It's really just pulled away from the zone and it's just going sideways. And this is why this week for me, trading Bitcoin isn't where it's at. Obviously, all the attention is in altcoins, which I'll get to, but we always have to look at Bitcoin first, because if it does end up that this turns out to be a retracement to the high of the week before further downside, it may end up causing a bit of correction in the altcoins as well. So we have to be aware of that. And we can see that we have some pretty high pockets of liquidity below price, particularly at around 114,600 kind of area, which is this very bright zone here. That's a huge level of liquidity. And if we were to break any lower than that, we also come back to retest a previous daily candle close, which is at around $111,500, which may also end up lining up with the 800 EMA if we were to come back down that low. But I'm not necessarily saying that I think we will retrace it all, because right now we're ranging. So that leads me to want to have a look at where the current orders are waiting. So I can see that there are buy orders very close to the current price. This is explaining why we're ranging. So that is currently holding price where it is right now. Below price, we've still got very large orders at 114,600. So I did talk about this target earlier in the week, and it is possible that if Bitcoin cannot get back above and retest the high of the week, which is exactly 119,655, then we would expect that it is coming down potentially into those orders, because not only do you have the long orders that I just showed you, but you have the high pocket of liquidity there. That makes that a very strong target. We have the initial move to the downside, we have the lower high, and currently a rejection of the high of the week. So at the time of me filming this, we're in the UK session. I'll try to get it out before US starts, but I may not be so lucky. But going down to the 15-minute time frame, we can start to see the structure changing a bit more clearly since the high of the week retest. We've broken down from there. We have come up, and today's initial high of the day did create a lower high. And so far in UK, we've retested Asia's initial high of the day, but we didn't break it. We also have not yet broken the initial low of the day. So it is likely that the US session today will break one of those levels. And because so far this is a lower high, I would anticipate that it's going to break to the downside. But I'm also not particularly, like I said, I'm not taking the shorts, because there's a high chance for that analysis to turn out to be wrong, because if the votes get passed, we could see a God candle. So yeah, to me, I'm staying in my long positions that I've had for a few weeks, some for a few months. I'm not trying to bet against what is happening right now. I'm just aware where the liquidity is. And if we're lucky enough to get a pullback, this is the zone where I will be looking to A, open new long positions, and B, add to existing long positions. So that's my personal play. If we don't, we just have a God candle, then I'm just going to stay in my long positions. I'm not adding on a green candle. I only add on red candles. Now, we do have news events coming up. They probably would have happened by the time this video comes out, but I'll just note them so that you're aware. We've got retail sales and unemployment claims coming out at the same time, and that will be towards the end of the UK session. So that may cause some kind of a reaction. That may be the thing that causes the price to break Asia's range for the day. So keep an eye out on that one for sure. Now, when price starts to get a bit overextended, like what we're seeing with a lot of your altcoins, you really need to start paying close attention to the funding rates, because once the funding rates start to peak, that's going to be a bit of a hint to you that there may be a pullback coming, because they have to reset at some point in time. Let me just quickly explain to you why that's significant. I wrote this for the Discord community a really long time ago. Now, basically, funding rates are like your final confirmation that a trend might be starting to be overheated. The first thing you look at is your pattern. If you know the TBD system, the pattern timing levels is important. If you don't know it and you want to learn it, we do have memberships. You can check them out. Link is in the description down below. You also want to pay attention to the liquidity and the heat map orders. So I showed you the heat map orders earlier, and I've showed you the liquidity as well. You want to keep an eye out on open interest. So if we have a look at the current open interest on Bitcoin, as an example, it's starting to drop as price is going sideways. This makes sense because Bitcoin is ranging while alts are pumping. So you want to have a look at your open interest on the particular altcoins that you are trading. And then finally, you want to have a look at the funding rates. But here's how it works. For the purpose of day trading, you really only want to have a look at the current when you're assessing if the funding rates are high or not. Anything higher than that is not relevant to day traders. So when you go to CoinGlass, this is coinglass.com/funding rate. I'm talking about this here. So don't worry about 1 day, 7 day, 30 day, 1 year. That's not relevant for day trading or for short-term trading. We want to be on the current tab right here. Now, for Bitcoin, a funding rate of 0.01 or less would be considered normal. When the funding rate exceeds this, it means longs are paying shorts a rather large fee for participation in the market. When the market is overhyped and irrational, it costs more to be part of it. And the opposite is also true with shorts paying longs. So what we want to do is have a look at the Bitcoin funding rate and see if it's over 0.01. If it's over that, it's not normal and they're starting to peak. So now when we have a look at Bitcoin, the current funding rate on Binance is the one I pay most attention to, is 0.01. So things are currently normal. This may not be the case for the altcoin that you are trading. So I'm teaching you how to do this with Bitcoin, but this is all free information that you can access on the internet. Whatever you're trading, be sure to keep an eye out on the funding rates. But also, when it comes to funding rates, don't just watch the altcoin that you are personally trading. Watch the market as a whole, because as you start to see all of the funding rates start to get above 0.01, start to move into that higher range, that's when it's basically acting as like a warning that, hey, a pullback may have to come soon, and you might consider taking some profit or just moving stop losses or however you decide to manage your trades. So as a rule, under 0.01 is normal. Between 0.02 to 0.03, pay attention and tighten stops. Warning bell is above 0.03. So right now it's fine, but keep an eye. Speaking of funding rates, these are brought to you by exchanges. So if you are looking for somewhere to trade, consider checking out Femex. You can trade spot on Femex futures. They also have earn programs, a lot of other stuff. Not to mention, one of my favorite features is the coin and perpetual, meaning that you can actually earn your profits in one of your favorite altcoins or even Bitcoin, if that's what you prefer to do, as opposed to earning your profits in USDT, which is a stable coin, which is not what you want in a bull market. So if you are interested in checking out Femex, there is a link in the description down below, and that gets you VIP 1 trading fees only if you use that link, and it also gets you global access. Now I want to take a look at the Bitcoin dominance. This is looking delicious. So this is why we're seeing our altcoins pump, because the dominance is still heading down. We do have a very key level right here that you can see that previously was a resistance, flipped and acted as support, and now looks like it's a free fall, which is what we want. We want to see Bitcoin dominance free fall, but it looks like it's a free fall back to that level. So we need to see what happens at around 62.1 dominance. It may hold there for a little bit. Hopefully, best case scenario for alt season is that it holds there, gives you a lower high, and then we see continued movement to the downside. Whilst it's in the process of doing that, if it does that, that might be where you see your altcoin pullback and get a second chance to get in. This is a daily time frame, will take a lot of time and patience. So don't freak out. Like the title says, no need to ape, you've got time. So keep an eye out on that 2.1 kind of level. For continued alt season, we do want to eventually break below that level. When we have a look at the stablecoin dominances, lower highs, lower lows, this is just trending down. I mentioned this key level on my last video, so I won't spend too much time on it. 5.82% on this chart, which is USDT and USDC dominances combined together. That's going to be a prior resistance retest. So again, we also want to break it down for us to have continued alt season, which brings us to the total minus stablecoins and minus crypto. No retest yet, just straight up Valhalla. It's crazy. It's great. This is why we're seeing our altcoins pump. However, doesn't mean there won't eventually be a retest. We are in a hype week after all. So if you're not in on the things that you want to be on, don't worry. The excitement will die down and you will get another chance. Now, speaking of altcoins, we need to take a look at ETH BTC. Finally, after so long, we have broken the daily time frame 200 EMA. This is perfect. This chart I have been talking about on this channel for a long time. You can see here, this was our rise level 1. We went into a really long period of consolidation. During this consolidation, this became the area of interest for me, which I pointed out on this channel. And I said a retest into that zone would be fine, but we don't want to close below it if we are to believe that ETH is going to break out next. So we got the absolute most perfect retest on ETH BTC. And then what we're seeing now is the follow through with the breakout and finally the break of the daily time frame 200 EMA. Why is this significant? Because when you zoom out on ETH BTC, you can see that really all the way back since Feb 2023, it has not been able to convincingly break above the 200 EMA on the daily time frame. Anytime anytime that it has, and this is also a current danger, so pay attention to what I'm about to say, anytime that it has only broken above it by a little bit, then created an M formation before further downside, even through here. So this is caution, because right now we only have the first break of it, and this at the time would have all looked like this, brought in that extreme excitement only to lead to disappointment. So whilst it's good that we have the initial break, once again, the move needs to be proven, and it only gets proven with consolidation like this or a higher low. So again, being the daily time frame, that's going to take time. Eventually, price will chop. It will happen. It doesn't feel like it right now, but eventually price will chop. And in that chop is where you build your positions. On retests is where you build your positions, just like here. The only problem is that when this happens, people don't want to get involved because they believe the trend is going to change. So that's why you've got to have a really good trading strategy. And our trading strategy of the 3-level rise and 3-level drop, that's what would have had you bullish here. It's what had me bullish here and able to take advantage of getting in early in anticipation of what's happening now, so that I don't have to be one of those people FOMOing that I missed out. Of course, I always battle emotions. Right now, I wish I was even heavier in my trades. That's always a thing. I'm not going to lie and say that you can be free of that. Emotions will always play with your head. But at the end of the day, it does feel a bit better to be on the right side of the trade. And the TBD system definitely helps you do that. So here's the thing about that though. This move here qualifies currently as rise level 2. And then, like I said, it has to prove itself, right? So this is rise 1. This is rise 2. We would expect a third rise to come, pending we don't get the M formation above the 200 EMA. So if that were to happen, once this move to the upside is done, we could expect that we're going to go into chop for some period of time, just like we did here. And if it turns out to be the same length of time, that chop takes us to the end of August. So whilst things are crazy parabolic now, there will come a time that we chop for months again, and we're going to be sitting there bored going, what's happening? This is so boring. So those are the times for you to accumulate your position on the provision that you think the bull market is still continuing. And that now leads me to have a look at ETH USDT. So this was a chart that was shared on this channel. We talked about this being the board meeting, and you can see my notes are still here, where there were 2 areas. At the time, we were ranging like this, and my note said, see if it holds here first. Otherwise, if we break it, we may head back to the low of the week. Now, that was the low of the week at that point in time, so that's irrelevant. But the point being, see if it holds here first. And you can see with many candles, it held at the exact yellow line of 2395, and it left behind this liquidity. So we had 2 areas to watch. This, if it held, and if it didn't hold, we would then watch this area, but it did hold. So therefore that became the area to pay attention. We had high liquidity above that consolidation, and we've taken that out now, which is fantastic. And we've come into my second take profit region, which is this unrecovered vector right here. So ETH is doing great, but now that liquidity has been taken, we want to see where the new highest level of liquidity is above price, because that's where it's likely to head into some resistance. So what I'm seeing is this pocket just a little bit above where the price is currently, and that falls within my original take profit range anyway. So that liquidity pocket is between 3.5 to 3.650. If we take that out and break through it, new liquidity will form. It's not there now, but new liquidity will form, and I'll update you if and when that happens. For pullback entries on this, we can safely say that we're probably not going to come all the way back down to this zone anymore, but we do have now this new pocket here. So again, may take time. And obviously while this move is happening, there's also going to be new liquidity building below price. So again, I will adjust this in the future if need be. But for now, the biggest pool of liquidity below price is 2.8 to 2.9. So once this run is over, if we do pull back, if there is profit taking, if anything happens to go wrong with the voting or whatever, even just when it's done, like once it's done, there will be profit taking. We may then trickle down, build a bull flag even, and the bull flag might take out this liquidity before we see further upside. So it is a long-term target, not saying it's going to happen in a day, but with enough patience, if price did eventually come down to this zone, it's going to create a higher low. it's still going to be macro bullish, providing it bounces out of that zone. So right now things feel crazy, and I understand that this is likely messing with your emotions, but you have to remember that everything happening right now is fueled in anticipation of this crypto week. This is so typical of crypto traders. They always do this. They ape in on news that they think is going to bring mass amounts of money into crypto. And once the dust settles, they finally realize that when it comes to government processes, things don't happen overnight. Once that reality hits, crypto traders get bored, profits get taken, the market pulls back, and more often than not, we see a ranging move after like what we've seen this week, potentially for months. So even if it doesn't feel like it right now, you will have another chance. And the best part is that if that chance comes along, it's going to be on confirmation of a new macro trend, not aping into a news-driven psychotic pump. So after the voting is done this week, let's assume every bill is passed. The Clarity Act and potentially the standalone anti-CBDC Surveillance State Act, or the defense bill containing the anti-CBDC language, then head over to the Senate for their consideration. The Senate might hold its own hearings, debates, and potentially introduce amendments. But the Genius Act has already passed the Senate, so if it clears the House, it goes straight to the president. Now, if the House and Senate pass different versions of a bill, they then go to a conference committee to iron out the differences and create a unified version that both chambers would need to vote on again. So it's a multi-step process. And if all of this were to happen, the excitement amongst crypto traders would turn into disappointment as they now figure out how long things take at a government level. And that's where the profit taking and sideways chop will come in, giving you the chance to load up on what you believe in for the long term. So governments getting involved in crypto and creating legislation, it's a long process. None of this happens overnight. It's long-term mega bullish for crypto, and you have time.